Hi traders, welcome to the Flow Show. New week begins, ready to rock and roll. Morning, Kay.
Hey, morning, Ryan.
Oh, mate, you sound like you've been smoking about 50 packets of fags.
I feel like it as well. I don't know. Weekends don't do it for me anymore. It's 2 weekends in a row where I wake up from the weekend and it's not going the way I planned it.
Yeah, mate, you need to swap it around. Have a 5-day weekend and a 2-day working week.
That must be it, mate. That must be it.
Yeah, that's the way to do it.
Anyway, we're ready.
We're ready. No Stel today. He's swanning around the Greek islands, polishing the surfboard and using it, probably, no doubt. So he's having a nice day off. So just me and the K Meister today, and we'll get stuck into it now. China and Xi may be looking to revive a financial policy committee to coordinate financial policy moving forward. This means also him possibly appointing one of his key allies in a top position at the PBOC. This is said to be another part of him trying to get greater control over all things in China. So there could be some changes coming there, particularly at the PBOC. Whether it means a change in remit or just more oversight, we're yet to see. But that was some news out over the weekend. I'm keeping an eye on the fixing rates because $1 is still moving higher. It was fixed overnight at 6.9572. We're very close to that 7 level. It could be a bit of a level for China, the PBOC. If we start to get comments coming in around that, it may be the time for those of us in longs to think about getting out, or at least getting the stops right up behind it. So I'm going to see how the fixes play out into this 7 level, see if they keep creeping up or whether they start to indicate that they want to see things coming to a halt as far as this rally is concerned. But 6.9572 was the fix overnight. Over to the Bank of Japan, and Ueda was in the upper house hearings today. Not really anything different of the comments. Appropriate to continue monetary easing from now on as well. Trend inflation must heighten sharply for the BOJ to shift to monetary tightening. Pretty much a second round of comments, and pretty much sounding more like Kuroda, which is a bit of a surprise. No real reaction in US dollar, Japanese yen. Still hovering around the highs from Friday, but this was largely, as we know, driven by the move up in yields and what we saw in the PCE, so on and so forth. So even his comments have not really managed to see us making any sort of fresh high or anything on that. So at least from that aspect, the market is, I don't know if they're ignoring it or they've got his number and they think he's Kuroda Mark II. Obviously, the risk is that he does get in the hot seat and decides to talk a little bit differently. But at the moment, as we've been saying, he's not going to be upsetting the apple cart in these performances, and he's going to have to be very careful how he manages any tightening if it needs to be done. Obviously, we're still on data watch there. Coming over to the ECB, and the guard's been waffling all morning, keeping a pretty hawkish stance, saying more tightening will be required if fiscal cooperation is absent. So we've been mentioning this, that some ECB heads want countries to pull back on their energy stimulus measures for risk of sending inflation even higher. It's a bit of a trade-off against what they usually say, which is that countries need to do more fiscally. Now they want them to do less. Make your minds up. Traders, meanwhile, have moved ECB peak rate bets into 2024 for the first time. So the higher for longer message is translating over to the ECB and to European traders as well. Coming over to the UK, and there we go again with the old Brexit shenanigans. Von der Leyen is apparently jetting over and is meeting Sunak today in Windsor sometime in the next couple of hours, apparently to announce finally a Brexit deal on the Northern Ireland stuff. Sunak claims he's won big concessions from the EU, and we'll have to wait and see what those are. Apparently, though, this is the fly in the ointment. Northern Ireland's DUP is unlikely to be on board with some of these measures. It seems like Sunak is going over their heads with this, which is likely just to create a bigger bun fight. Details remain to be seen if we get any news on this. I still don't think it's worth a huge amount to the pound, given it's been on, off, on, off, on, off, deal, no deal, deal, no deal forever. But I wouldn't rule out at least a confirmatory pop, perhaps in the pound. Again, I'm not looking for hundreds of pips here. But I think the risk is, if he is going over the DUP's head, then that risks him getting a bit of trouble, maybe a bit of revolt from some in his own party from the DUP. We have to see the details of this. It could be a case that we get a small confirmation pop on good news headlines, and then the whole deal gets ripped to shreds by MPs, the press, and whatever, and we see the market going the other way. So a bit of two-way risk coming in for this. Just keep an eye on the headlines. If you're in pound trades, make sure you're covered and you got your risk fully covered in that. While we're in the UK, traders are now fully pricing in 50 BP hikes by May. So another couple of hikes coming in, some even looking at potential June hikes. So all central banks really now, or the market is starting to price up central bank hike expectations. One of the big BOE doves, Temrero, said the shape of energy price shock and monetary policy lags suggest risks of over tightening. It's a massive dove, she is. UK is now likely to undershoot its inflation target, but she does say that the BOE policy will do more if inflation persists, and then repeats that the main risk is that the BOE has over tightened. This was the young lady who was calling for rate cuts, even while others were calling for 75 pip hikes. So two extremes of the Bank of England there, and the other clowns are waffling around in the middle. Right, over to the Fed, and Mester, one of the big hawks, said financial market alignment with the Fed is much closer than before. This was on Friday, before the PCE. My funds rate was above the median in December and still think we need to be somewhat above 5%. Also repeated that she saw a good case for a 50 pip hike at the last meeting. And thus we got the PCE numbers last week, which were a bit of a shocker. Not only coming in above expectations, but up on the prior month as well. Now, some of these were revised higher. These prior months were revised higher, but still, that was a big beat in the core, bucking the trend of seeing lower inflation as we have been over the recent months. So it's a bit of a shock for the market, bit of a shock for those pricing Fed hikes. Fed swaps are now pricing in a peak policy rate of 5.45% out to July 2023. Back on the 15th of February, Fed funds futures had a hike top at 5.268% for July. So as you can see, these expectations are continuing to come higher. Later on, we got the Michigan numbers, and the 1 year inflation expectations dipped a touch to 4.1%, while the 5 to 10 year stayed unchanged at 2.9%. So at least from the consumer standpoint, inflation numbers still running hot, but not gaining as much as what we're seeing in perhaps in some of the data, and particularly that PCE. Mester was out again after the PCE report and said that the report shows the need to do a little more. It's gratifying that inflation has declined from the peak, but more work is needed. The rate peak matters more than the meeting to meeting moves. again, that puts it in the we will continue hiking and hiking and hiking until the job is done. Fed's Collins was also out later on Friday saying more hikes are needed to deal with too high inflation. We will need to get rates up and potentially hold them there for a long period. Recent data affirms the case for more hikes. And a late bit of data was from the Dallas Fed. They issue a trimmed mean for PCE price index, annualized. Their number came in at 6.3% versus 4% prior. So as you can see there, them seeing higher inflation coming in by their measures. Anyway, so overall, we're still in this situation where the market is really getting behind the rates are going higher for longer. And that's the mood we're in. That's going to keep the dollar on the front foot as well as yields ticking up. Kay, you got any, I doubt whether you got much into it. You got any headlines that you want to throw in that I've missed before we get cracking in?
Hold on one second. Yeah, so for one thing, the UEDA comments are just telling us that the UEDA is not really the great reformer that some may have hoped for, at least not yet. Now, the question is, will going forward, and I think is it on the 10th of March, the BOJ? Let me just quickly check while I'm chatting. The next meeting, yeah, so there's still a risk that Kuroda goes out with a bang, you know, and preparing the terrain a little bit for Ueda, so he doesn't have to do as much as some people may like him to do or want him to do or fear him to do. But it looks very clear that he's not going to, as you say, rock the boat and still has this the government in mind, to not put the government finances in trouble. So I reckon perhaps not necessarily versus the dollar, because the dollar will be doing its own thing, and we're close to big levels in the yen. But if you look at it globally on the cross side, yen is a little bit under pressure or weighed down, and I reckon that may continue unless we see something from the Bank of Japan in March. So that's one thing. On the rest of the headlines, not really. The only thing I saw was this article where the market and investors seem indeed to be having to reprice the bonds, and now some start to see, and we already spoke about that last week, some start to see the possibility that Fed would have to go to 6%. Now, if you'd listen to Mester and perhaps Bullard, actually Bullard, he didn't put it that high alone, but Waller and friends, they actually may push it up there. But globally, we're still in this repricing process, right? Where the market thought that they would stop very soon and start to be dovish. The data tell us that they don't have to stop and start to be dovish. So there's no way we're getting closer to a pivot pricing right now. And then on that thing, and I don't know whether I should be worried for the CNH or whether we should be doing something with it right now. I'm flat on the dollar CNH, but this Xi taking control of Chinese finances as well is, I don't know, to me it sounds a little worrying for investors perhaps. So I don't know, I'm probably going to try and buy some dollar CNH again on a dip. But other than that, headlines, I did not really see much. Yeah, I'm still half surprised that the sterling market is not trading the Northern Ireland possible deal more. And no, for the rest, I don't think you missed anything at all. There's this one line saying that the Chinese ambassador to the EU says that EU leaders may visit China by mid-2023. But yeah, what's gonna come out of there, or what are we going to hear ahead of it is so much a wet finger up in the air, right?
Yeah, exactly. Right, we should note that the next FOMC isn't until the 21st, 22nd of March, but we do get Powell at one of his biannual Humphrey Hawkins testimony type events. I think that's March the 7th he's appearing for that one. It's not this week, next week. We don't also get NFP this week. Bit of a strange one. Usually it doesn't come out on a Friday if the Friday's the 1st, but Friday's the 3rd. And we're still not getting it. That's not out until next week on the 10th. But anyway, back to the point about the FOMC. I think there is a little bit of a risk that the market does get a bit too cautious, or sorry, gets a bit too excited on its Fed repricing. We know the market always tends to run a bit further than it needs to. One of the big hawks, as Kay mentioned, Bullard, he still has his midpoint at 5.375%, which puts Fed funds at 5.25, 5.50. So even despite everything going on, he's not turning any more hawkish, and he's one of the high dots. So the FOMC is going to be where we get confirmation on whether the Fed are looking higher, and that's going to create a little bit maybe of a pullback in this pricing, because if the market is starting to heavily price higher than 5.5%, and we don't see the dots confirming to that, or we don't get Powell with any comments that confirm that, then we're going to get a little bit of repricing, if you get my drift. That's likely to put a top in yields and potentially a top in the dollar. But until then, we just have to go with the flow. At the moment, yields are staying well up, as you can see there from the 10 years on the screen, keeping to its highs. Dollar is staying on the up against a lot of pairs. So for now, the trend is your friend. That means dollar dips are the way to look at it, or what the market is playing. And you've got to be careful if you want to fight those moves. I'm having a serious think about whether to fold in my dollar yen shorts that I've been running that are now offside. I still have something in the back of my mind to say maybe we're seeing a bit of month-end stuff going on as well. So I want to get over these days if I can, but if the price moves too far up, I'm going to look at just paying the piper, getting out of those shorts and reassessing the trade altogether, because it's not working. The data has been much stronger than I expected, and I'm not going to sit in a losing trade too long if the signs are telling me that I'm wrong. But for now, looking at dollar yen, 136. You couldn't get a more defined level at the moment for that, as far as your support goes. And we're running into traffic at the moment around 136.45, 50, and then obviously we've got the prior highs and into this fib up here, which if we come out a little bit, gone squirrely, is the 38.2 fib of the move off the highs up in the 150s. There's a lot of 38.2 fib action going on around the grounds at the moment. Euro dollar not quite getting down to the 105. It's got its own 38.2 fib at 104.61 down there. So that's a bit of a zone for the euro to traverse. As you can see there, 105 is a big, long historical area. If I do a quick zoom out to the weekly, I'll just put on a little bit of a clearer chart that might help you. You can see how it's had a say historically going all the way back to the 2000s pretty much. It's one of these numbers that tends to have a say when you've been away from it for a while, had a little holiday away and come back to it. It has a say in proceedings, and that's the case here, because we had a little move, as you know, up to the 110s, 111s, and now we're back down. So this is an area I'm going to expect to see some action going on here. Down to that fib, we've also got the 100 DMA propping up there right around that fib as well. So a big zone. These are the sorts of levels that if this repricing, if this dollar bullishness is going to continue, these are the levels it's got to break. If it can't break these levels, then perhaps we find a bit of a bottom or top, depending on what pair you're looking at. Aussie dollar is looking far more weaker at the moment. Let's come in a little bit. Let's go there. Let's see what it tells. So we've had a little test of the 67 handle, which was coming in towards one of my big areas of support. So we've got this whole area really down to 66.60. That's the 50 fib of the October move. So we're already through the 38.2 here. This is going to be a bit of a line in the sand. It's the big traffic area that we had before last year on the way up. If we get under here, then we're potentially heading even further lower, maybe down to the 65s. But again, you know, how much has already been priced in this to do with the Fed and the US side of things? We already know the RBA are turning a bit more hawkish as well. They're sticking to that may have to do more and keep them rates up for longer rhetoric as well. So this is going to be a big area. The only issue I've got at the moment is that bounces are looking very, very weak. That first test of the 67 level, you know, we managed to get up to not even 30s. So it's a bit in the balance here at the moment. Nearest support is around 67.40. So there's your battleground, a big figure, 67.40. If we get above there, maybe we need to think about getting another move up here. But then we've got all these old support steps coming in into 67.80, that old fib, into 68, and then as we go up, 68.50. So a lot of work to be done to turn this particular move around that we've seen from the 71s, even the 70s, and it's still looking very bearish, very weak at the moment. Kiwi was a trade I jumped on, a break trade on Friday. Had a sell stop in at 61.85, which got triggered. I've been slicing and dicing. Again, a little test of its 38.2 fib of its move up. Let's get it on there for you. So the move up from September, testing its 38.2 fib. It did get under by about 10 pips, but it hasn't lasted and it quickly got back above. So I'm still giving the level a bit of consideration. While we hold below the 61.90, 62, it does keep the bearish phase in play. It was going to need us to get back above that 62 level to be even start thinking about whether this has just been a little bit of a fake out. But for now, it's holding the break. It's not even getting up close to it, 61.70s. So at the moment, we're a little bit of a range between that prior low and 61.70. Then we got the 61.90, 62 after that. Euro sterling quickly. And then I'll let if Kane wants to have a little look, he can. Not doing an awful lot again. We've had the move last week down towards this 87.70 area. Didn't quite get down there. Back in the 88s, but not looking like it wants to rocket anywhere soon. So a bit of sideways action. You've got to have some patience with this one. I still remain long, and I added more at 88 last week. But it's going to be a waiting game, I feel. This one probably going to be neutral in terms of reaction to a Brexit deal. It just depends on whether the pound gets bought wholesale across the board as to whether this might dip again. If it does dip again and we get anything maybe down in this lower area, I may think of adding back to some of the cuts I've made to the 88 longs that I took last week. But in real terms, it should be a bit neutral for this pair, because what's good for the UK is potentially good for the EU as well in terms of deal getting done. Right, just looking around some other guys. Ali, you're in dollar yen. What are you doing in dollar yen, my friend? Let's have a look. You're long dollar yen. Okay, you seem to be running it okay at the moment. Where are you long from, mate? Let us know. You're targeting 136.60. So that's right up into that fib. Getting close, but no cigar at the moment. But good luck to that. Hope you're taking some money off the table before it gets out there. Dollar CAD, yeah, it's another interesting one. Getting up to towards a decent level up at, let's have a look, up at 136.90, 137, big possible level up there. One I'm keeping an eye on for a potential short. Again, if the dollar is shooting high, this is an area that needs to be broken. If it can't be broken, then we've got a potential trade in that one. So have a look at that. Kay, do you want to have a quick look around?
Yeah, sure, mate. Let me, probably going to run over pretty similar stuff than you are, because I'm eyeing a couple of things. Let me start with the metals first. Just a quickie. I am, as I've been saying on Face as well, and so people in our room know that I've been letting a lot of my stuff go in this zone. About even my long-term position, I've cut it down to the minimum because the resistance is very strong still in this 24s. And now that we've corrected $4, it's I'm starting to get interested again. Not saying that it's going to be the bottom here. I don't know, and the dollar is still bid, and the yields are still pushing higher, so there may be more to come into the 19s. Why not back into those levels? But yeah, just starting to shyly reload if I get them around. I think I'm gonna, because I'm at 2050, I'm going to just put them a couple of cents higher, around 2055 or so. So I'm looking to start to reload this because also, and I'm not fighting because the higher dollar yields, because I have been trading the dollar on the long side. So that gives me a bit of leeway on other stuff, and this will be very much smaller position because I'm going to reload downside as well, and perhaps push the button if we go back above 22.20 on this one, but not before. I also think because of the economic data holding up, that silver perhaps as a good reason to bottom before gold may do. A lot of people are watching the gold-silver ratio. I don't, but somewhere in the back of my mind, it's of course there, because I do think that one can move faster than the other. On gold, yeah, the low 18s and then 1790, I think, is going to be a bit of a level that we have to be careful about. And I tend to agree with Ryan, but then yes and no. Well, yes and no. I do think we can go further on the yields, but as Ryan rightfully said, this market has the habit of overshooting. The pendulum swings from one way to another, and we are possibly in this swing to the right again, or to the upside again, which could take us through 4% on the 10s, and perhaps up to 410 or so. But we have to realize that this is more the medium term and expecting what may happen after the Fed is done. But in the meantime, they can't always be too far off from Fed expectations, because then you start to have a mismatch in what the short term bond market does and the more medium to long term, which is ultimately it's not economics 101, but it's something that I noticed over the course of the decades that I've been in the market. If the yields go too far into inversion, if the curve goes too far into inversion, ultimately, even with yields going up, it could be actually having an adverse effect on the dollar. So it's something that I'm starting to keep in the back of my mind. And I already said that if we would go closer to this 38.2 on the euro, and it's close to the prior spike low as well. That I may start to look at some things now. For the time being, and I was long dollar yen on UEDA. I was long a couple of other dollars as well. I bought it again, but only very small. For the time being, I'm watching it pure dollar yen. But if this euro dollar comes here closer into that zone, and if I'm still in my dollar yen by 10, I may start to leg it into euro yen again. Because I think ECB is equally still on the hiking path, and my global idea on the yen is that I've already said it. UEDA doesn't seem to be the big reformer, and yes, we will have. And I still think the base case is that they have to normalize a bit, because if they don't use the window of opportunity now, I don't see when they will ever get out of this straight jacket that they have put themselves on. So yeah, these dollar yen, we have this trend line which has been respected. We have a bit of a level there, 136.66, as people already said a couple of times as well. There it is, that one, the 38.2, and then if you look at the daily, you have the 100 and the 200 are really there, 137 of, where is it, 0510. So they are there, but now the cloud has dropped, right? I showed this last week. The cloud has dropped dramatically. It's now down under 135. Now, in the immediate, it should not really have too much of an impact right here. So we can concentrate on other stuff. I also think there's a bit of fib stuff going on in the mid 137. So this zone is relatively important. But what we have to bear in mind is that on any setbacks in the dollar, this 134.80, 135, the figure is going to be pretty important, right? This is going to be a big support area for now, and that is taking us pretty much into the next Bank of Japan. So keep an eye on if we get setbacks in the dollar or the dollar yen in particular. Keep a close eye on what's happening into the 134.80, 135 zone. Cable is very surprising, right? What's happening on the sterling? Northern Ireland deal, okay, it's having zero impact. And yes, as people were already noticing, this could be, this seems to be flagging this kind of thing, this euro sterling. So we could, if we get back below 05, 07 on the euro sterling, we may see some activity back down to the prior lows, but it seems very, very, very rangy. I guess the market has made up its mind that Bank of England and ECB could be running in hand with each other as far as rate hikes are concerned, and don't see too much of a divergence in what's happening now on the economic front in the UK or the Eurozone. Cable, bit of a range forming here, 119.80, we're right on it. And on the downside, 119, low 119s. I may have missed one there. I'm also very less bearish sterling right now than I was for a long while. And I don't know. It feels to me like those low 119s are seeing some support. So I may get tempted if we get back down there with a stop below 119 or be patient and wait for this. But yeah, it's looking. Of course, the dollar is still strong, but it's looking like holding a bit better to start the week. Let's keep an eye on that. The one thing though that holds me back from doing much right now is that we are still in full swing for month ends, right? And if we look at the moves in equities and so on, I'm not sure that we are going to see many buyers in sterling or in the euro into month end. I don't know, something to keep an eye on. Perhaps actually euro dollar and cable could make it lower into month end. I don't know. I mean, the models are saying mild dollar buying, but I don't really see why it would be. But I can see the other side of the pair having the effect of perhaps a little bit of euro or sterling selling. Needs to be confirmed, of course. Okay, Aussie 66.80. 66.80. That's where my next support zone comes in. We have broken. We are around this. I think this trend line is now getting watered down. But I would pay close attention to what's happening at 66.80. If we get there, perhaps into month end or so. All the while keeping an eye on what's happening in the US yields. But we get down there, I think it's going to be an important level again. I don't know whether it shows on the fibs of the latest move.
Yeah, I've got a 50 fib at 60 E4.
Yeah, 66, 67. I've got it here, but it's on the daily, so it may be a little bit rough. Okay, so that's yeah. I mean, it's perhaps pretty close then. 15 points here. Those 15 pips here should be showing up as support. Kiwi, you have already covered it. We're still seeing the Aussie Kiwi being heavy after the RBNZ and the RBA. To me, still a bit of a important zone here on the Aussie Kiwi. 75.85 is 108.75.85 has always been a level of major attention. So keep that one in mind to see if we can break there, or if in turn it holds again. It's a bit of a strange one, because the RBNZ hiked again, but then or is very data dependent, right? Like most of them are now. So the Kiwi could strengthen a bit more on this cross, but is it going to really break down here? I'm not sure.
I think this one is really showing the divergence trade that we've been talking about this year. Yeah, because if you look at from the rate perspective, Kiwi's currently on 4.75% interest rate, and the RBA is back on 3.35%.
Yeah.
And they're both hiking at pretty much the same pace. So the divergence is showing there, over 100 basis points difference between the two banks.
Absolutely, completely there. Yeah, that's absolutely the case. This is pretty much a good divergence. There has been a good divergence trade, because it was one on the way up and it's one on the way down. Because there was a lot of uncertainty around the RBNZ for a while, and then they confirmed, no, we are continuing, and we are going the other way around. So this has been a pretty decent divergence trade. Dollar MEX, it's not pushing higher. It's not. We came relatively close on Friday. We had a quick look at 1850. I'm not even sure if we printed 1850. It says here yes, but I'm not even sure we did print 1850. But it's still not really starting to correct much. So this thing is still very, very, very bearish to me. If we can't even retake 1850s now, which in my opinion we should have, with the US yields going higher, because that's the reason why I covered some of my I covered actually all of them, the Euromex as well last week, because I had like ECB hawkish, then the US need to correct, and actually the Mexican CPI came in just a tad weaker, and yet we are not able to get back above 1850-52. I mean, it's telling, right? I mean, the MEX is still very, 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 very strong out there, and we are seeing the same thing on the Euromex. We had this, I covered it, then we had this little blip up to 1850s, but we can't even 1950s, but we can't even go to any decent retracement level right now. So I've re-entered just a tiny bit on this one, and I'm still yet to decide whether it's going to be a carry trade again or whether it's just playing the end of month and then see what's happening. But for as long as we don't see any more bounces, this could be back at low 19s, 1910 here, 1015. I have a support. This could get well back down there if before the end of the month. It remains to be seen, but it's a real possibility. So, oh yeah, that was one. This dollar rand is really nothing goes anymore in South Africa, and that was one that I've been reading over the weekend as well. There's a lot of problems there in Eskom. There's a lot of geopolitical uncertainty. Ramaphosa can't get his government party to walk a straight line, really. And so for me, the dollar mix is still the dollar rand is one of the candidates to really go visit back above 19 again, unless something really dramatically changes there. So when he moved down to closer to 18, I think I'm going to try again and get on the bandwagon. Or if it really start to break above 1848, 49, call it 50. I think this thing can still go further. I've been reading a couple of things over the weekend, and it's looking ugly in South Africa right now. What else? What else? I don't know. Ryan already covered dollar China. It's a bit of an open question for me. Psychologically, Xi running Chinese state finance, running the PBOC. Well, I mean, they've always been having a hand in it, but I don't know whether it's positive or I would have thought it may have been negative actually. Chinese yuan, but I think a lot of people are looking at this 7 level to probably take some profits as well. And that's about it for me, folks.
Thanks, mate.
Yeah.
I shall grab it back if you're done.
Yeah, I'm done.
Yeah, no worries. DJ's got a nice short in Aussie CAD from the 92.30s. Looks like a bit of a break. Looks similar to the Kiwi actually. So you got that nicely. You know where you're wrong. Back above 92 is the price. What are you looking at for that, DJ? I mean, you got the 50 fib coming up down into this sort of 90, 80, 70 area. Where you looking at for that for taking some off. Another level down towards sort of 90, 30, 40 down here. So good trade. I think you're in the right direction for that one. I think you've got to be worried if it gets back above 92 there. Ali's saying there's large option expiries on euro dollar 105.60 and dollar CAD at around the big figure. Yep. For those of you who aren't in the chat room, I will show you this. This is our ForexAnalytix dashboard. And if you go to the market info tab, you get the daily bias chart, as you can see there. But what you also get is the orders and options, which I do daily. So you can see here Monday's expiries. We have got quite a bit from 105.50 up to 60.70. So just over 1.5 billion going off. Not a huge amount for euro dollar. You know, big liquid market, sorry. There you can see the 135.90, 136 in dollar CAD. Again, a billion there. It's big, but it's not. I wouldn't call it game changing at all. I've seen dollar CAD have 4.5 billion expiring, and the price has done absolutely nothing. So again, it's all down to what the market conditions are at the time. Dollar CAD, we're bang on it at the moment, round about that area. So if there's nothing else going on, then the options may have a say. That expiry may have a say in keeping the price glued around that point as well. Same with euro dollar, 105.50 to 70. if there's nothing going on, the market does nothing else but trade around the options. We are still in the end of month period, so keep an eye on those big fixes. There's one usually at midday, and then obviously the bigger one at 4 o'clock UK time. But keep an eye on those. If you start seeing little moves around the top of each hour, it could be a sign that there's some month-end stuff to be played. But that's the option stuff that you get on our chat room, and as you can see there, orders as well, market orders that get put up first thing in the morning. Obviously, if you want to come and join the ForexAnalytix chat room, you can do so. I'll pop the link in there, and you can take advantage of the special Forex Flow discount, 20% off your subscription. If you want to join us there, you get that off for the lifetime of your subscription. Catherine saying they tried to poison the head of Exxon because he was trying to do something about the corruption. I'll let you watch that YouTube.
Yeah. It's come. He's been in an interview, and well, he's been calling out the governmental side of things and briberies and stuff, and then all of a sudden they pushed him out on the and trying plenty of stuff to silence him. Let's put it that way, and that's one of the other reasons. That I said I'm still not a firm. A lot is going wrong there in South Africa. Guys, Ryan, I'm gonna have to shoot, my friend.
Yeah, come on.
Okay, I wish you all a great week, and trade safely. Talk to you tomorrow.
Yeah, cheers, mate. Hope you feel a bit better tomorrow. We're just going to finish up quickly just by looking at what data we got this week, because it is a fairly busy week. Usually the last week of the month into the new month is a busy week. We got some data out the US later today, durable goods, home sales coming up. Then we got Japanese retail sales overnight later tonight, Aussie retail sales coming in as well. Then we got some more GDP final numbers coming out as well. But tomorrow we kick off the big stuff, US consumer confidence coming in. That's going to be a watcher, particularly for those inflation expectations. On Wednesday, we're getting more PMI, the final PMI numbers coming in there from around the world. German CPI coming in there. Then we get the big ISM coming in on Wednesday, marking off a big week. ECB minutes, probably not going to be too much of a mover there, but we'll keep an eye out for anything in particular. Eurozone flash inflation readings, they're going to be super hot on Thursday to see, is the trend continuing lower, or are we going to follow the US and see things not falling as much as expected? Friday, more final PMIs coming in, and then the ISM services index. We've seen from the PMIs around the globe a divergence between services and manufacturing. So we're going to be looking to see if we get a bit more of that coming in between the US data, manufacturing first, services on Friday. And that wraps up the week as far as the data goes. I do wish you all a great week ahead. Trade safe, stick to the flow show. We'll give you everything you need to know, hopefully. And have a great week. We'll see you all tomorrow. Thank you very much.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.